the market about to flip? Whoa. Wow. I just wanted to do a quick video on this. Well, for me, it's Friday afternoon in the UK, but anyone that's waking up to their brokerage, they must be up today. There's not a lot of things that are actually down, and this is my watch list. I've got a lot of retail stocks dominating at the moment. 27%. Robinhood as well with the announcement that that a crypto CEO has bought a 7, 8, 9% stake in their business, and yeah, look at this. Everything is up. It's unbelievable. And not many things on my watch list are down. Twitter is the only thing that's kind of down. The VIX is down, which is what we like to see. And we just have a look here. Yeah, look at this. Pure green, which is what we want to see after the week that we've had with, inflation numbers and all of these different things. I think all of our accounts welcome this, which is hopefully going to end out as a potential green day. But what I wanted to do is I wanted to show you guys some data that could predict when this market is going to flip. Now, this chart over here is looking at the S&P 500, 400, and 600, and looking at the forward PE ratios of all the stocks that sit inside there, and they chart them out throughout, since 2004. And what is interesting, there's kind of two things I want to call out here. Firstly, let's look at the lows, right? So we got the 2008, 2009 recession. And then we obviously had some of the peaks in 2018. We've obviously got the Rona crash, and this is where we are to date, right? So the first thing really is if you compare where the forward PE ratios are for the 400 and 600 S&P cap stocks, we are nearly at, or pretty much at, the bottom of where we were during the Rona. And, not to say we can't fall down to 2008 levels, but these are pretty extreme. Since 2004, we've not. It's at the third lowest in since 2004, right? So that's showing that, we are thereabouts. And I think as well, if we look at, the big caps here, I still think they've got some way to go, right? They've got a little bit across down to fall. And this leads me to my second point. If we take these two areas over here, right, we are seeing where the S&P 400 and 600 stocks are below the red line, the S&P 500. Generally inside, when things are going well, you would imagine that lower growth companies are trading at higher PE multiples, and in theory they should be above the red line. Now, what we can see here is, it's a bit fuzzy when you look at it from this. And again, there is a weekly. I'll link to this PDF that's got all sorts of data inside here, but it's got the weekly as well, which is a bit more cleaner. But you can see here that when we had the crossover between the S&P 400 and the 600 crossing over the S&P 500, we then started to get this. And if you correlate that to the S&P 500, for example, you will see that these are the kind of bull runs inside the market. Same thing with Rona. It all happened relatively quickly. Inside this area over here within 2020, and then you would have benefited for all of this upside. I think until we get that crossover, until this starts going up, the red line starts going down, and let's do this on a markup actually. And I can't mark there. Let's do this over here. So I think what we're going to see here, we're going to see this line go down, and then this line go up. And then when we get that, kind of cross, that's definitely what I wanted to do. But I think you get my point. When we get that crossover there, I think that's the key pivotal moment of when we are potentially, crossing over up to the upside. And what was interesting is like, I've only recently started looking at this type of data since investing in some of the stock market, but we should have known better, right? Look at this. This is ridiculous, right? If I looked at this chart and I saw this, I probably would not be of buying Palantir and SoFi, all these growth stocks that I do believe have good business models and will be around inside the future. But the valuations that we're paying for these companies compared to when these were $30, $40 stocks to now being $3, $7 stocks respectively, you know, that if you look at it, the whole since 2004, we've not gone above there. And that could have been that we were not in the right place. So, I would pay attention for anyone investing in individual stocks. This chart, in my view, is very powerful and can become a leading indicator. So, again, if you go to yardeni.com or Google Yardeni forward PEs, again, I'll link to it inside the description below, so you can check this one out. But I think we are thereabouts. Not to say we can't go lower to 2008, but I think for me, what we really want to do, if you're sitting on the sidelines in cash at the moment, I would stay there until we kind of get this kind of crossover. Or if you're dollar cost averaging in, just continue what you're doing. But we are at substantial lows for the S&P 400 and 600 stocks over here. And again, I think we're close. I think we're close. Comment down below. Let me know what you think. Just wanted to kind of point that out there. And I think more things are coming green here. Hopefully, this is going to end up to be a good, nice, strong, positive green day, and hopefully we don't lose it all on Monday. But yeah, hopefully you guys are there. I've also got a video coming out on Sunday as always, so check that one out, and I should see you guys in the next video.